And finally, on to bank number 3, probably the most ambitious of the 3 new banks that we're featuring on Taking Stock this evening. Adrian Gore, Chief Executive of Discovery, with the official launch this week of Discovery Bank. But it won't be until March that your customers will effectively be able to get their cards and transact, Adrian Gore.
Yeah, that's right. I mean, we're rolling out a pretty sophisticated bank with a broad range of features. Our sense was we've been testing now for quite some time, but we need a test with our staff. We need a couple thousand people to test all of the piping, the functionality, and to start migrating the cards out of FNB, the Discovery cards. So that process requires a testing phase. Our sense was to launch it, to give it 2 months to 3 months to test properly, and then to roll out to the public. So that's the timetable. I think it feels responsible and appropriate.
Pure transactional banking, no car loans, no home loans, not yet anyway, but the idea is to get people to pay their salaries into the accounts and transact as they would normally through cash withdrawals if they want to from ATMs, not yours, anybody's ATM. They could do point of sale withdrawals or use cards.
That's right. So it's a full retail offering. I mean, the issues like vehicle finance or home loans, that's available through specialist originators. It's not our first port of call. We may think about that, but we kind of the behavioural chassis we've dealt with now, we feel is perfect for the space we're focusing on, and it's as you've described it.
You're pitching it as the first behavioural bank in the world, and you've built the Discovery business, the Vitality business, using behavioural science, understanding the dynamics of what makes people, how people behave to get themselves healthier. That lowers your risk from life insurance payments to health insurance payments. How does that dynamic translate into the way in which we treat our salaries?
Well, I think these these issues of health or how you manage your money, they are so analogous. People make a few bad choices that get them into difficulties, whether it's a health difficulty or financial difficulties. In fact, in health, we know there are 3 or 4 behaviours that lead to 60% of mortality. Eating badly, physical inactivity. Our data shows and our research shows in the money space, there are 5 behaviours: managing debt badly, spending more than you earn. There are about 5 things. In fact, we see 5 exact things that lead to three difficulties that lead to 80% of defaults. So the ability to use incentives and to share value, the core of the model is behavioural change, and using that behavioural change to share value. So if people do change their behaviour, they make us more profitable. We can use part of that profit to fund incentives to change their behaviour, and you get this virtuous cycle. So we've, I think, with respect, I think we're global leaders in using this in financial services. We've seen it in the Discovery card, and the Discovery card had in its belly the concept of vitality status and giving you different rewards, and it was incredibly powerful. So we've got some pretty strong data. There's a lot of research about it, and we're confident that we'll make the change. But having said that, the bank works if you don't respond to the incentives. You're going to get people that no matter what, they don't change behaviour. But it is at its core behavioural.
South Africans have got terrible money habits. Can you change the way people behave by offering them bigger discounts on healthy food, bigger discounts on aeroplane flights, bigger discounts throughout the offerings that you have traditionally through Vitality?
From our research, I strongly believe it. I think we have a deep conviction, and we've seen it. You're not going to change everyone, but you're going to shift a lot of people. And at worst, you're going to educate and expose them to their own circumstance. And I think if you look at the offering, the quantum of savings, 75% discounts on healthy foods and those kinds of things are hugely valuable. So what's at stake, even for people who could care less about this stuff but just want the discounts? We've seen that in health. Some people just do it for the sake of vitality status or whatever. That's fine. We're going to shift a lot of them, in our view.
A lot of the discourse in South Africa is about black-owned banks in South Africa. You've taken a step to say that your depositors, black depositors within Discovery Bank, will have up to 10% of the equity in Discovery Bank. That's quite a complex thing to figure out, depending on when I join, when somebody deposits money, withdraws money, the behaviour of that individual over a long period of time. How are you going to define who gets which slice of the bank? So
our intention, and I hope it's not overly optimistic, is we believe we'll have enough people coming across in the Discovery card base already. So in a short space of time, we're going to make up their 10%. I don't see that being an open book that over time accumulates. Our sense is from the get-go that 10% will be full. So we've actually worked out the allocations per person that will give you the 10%, the quantum of people will need to fill up the 10%, and we'll think we'll get there quickly. I mean, our sense is that a bank starting up from the get-go is quite a unique opportunity to create value. We hope we will. So it's a great way to create value, and we like the idea of depositors owning the bank. There's something good about that. So it seems to us to be quite a noble cause if we can achieve it. They're not exposed to downside risk. This is a startup. I mean, Discovery is good at starting businesses and we're proud of it, but startup has a valley of losses for some time. So we're factoring into that. This will take time to achieve value. There's no risk to the depositor at all, but we think it will work very well.
The point was made at your launch that the likes of Solidarity and AFRI Forum push back against sort of race-based incentive programs. They were very cross with Sasol over the BE scheme there for staff and not for white staff members. Do you not face the risk of pushback there?
Look, I think we need to consult broadly and understand it deeply. We feel strongly with deep conviction it's a good thing to do. And we will have those consultations and those discussions, see where it plays out. But we'd like to do it. It's in our plan. The public launch happens in March 2019. And at that stage, we'll publish exactly the details of the scheme.
Banking has very important and really boring bits to it, and amongst that is regulation, amongst that is global regulation, things like Basel III, global banking regulation. You fall subject to that now. That changes the dynamic of running the business of Discovery, doesn't it?
Not really. I mean, we've worked incredibly closely with the Reserve Bank. The regulation is onerous, I think justifiably so. Basel, all the Twin Peaks regulation. The truth is, with conglomerate regulation, the stuff applies to us anyway. So there are some profound differences between insurance regulation and banking regulation, but they're more and more consistent. So the issues are I think are different. We've hired very experienced bankers to run the bank itself. I don't believe you can get into this kind of business if you're scared of regulation. We found SARB to be remarkably rigorous but fair. It's not an issue. It's part of how we run an institutional business anyway.
What about capital requirements, the amount of money that you've got to keep on your balance sheet to offset any liabilities that you might have with your customers? I mean, that changes also the capital requirements of Discovery?
It's the same kind of thing. I mean, our insurance businesses have capital requirements. It's, the calculations are different, but we've done considerable capital modelling on the bank, stressed it. The group is capitalised very well. So in all of our capital plans, we've taken all kinds of views of how Discovery Bank will play out. It's no different to Discovery Life in terms of, you've got to understand capital, you're going to understand a 5-year, what they call an also approach to project it out. So it's part of the building a bank. One thing I would say to you, this is a heavy strategy. We haven't gone on like a fintech trying to not be, this is a fully regulated bank with heavy capital, heavy infrastructure. That's what we've done.
At what point do you close your current bank account?
I'm hoping when I'm if I'm on the staff program that our CEO is running, I'd like to shift my salary into this account as soon as I can.
Adrian Gore, Chief Executive of Discovery, wrapping up the three-way look at new banks in South Africa. Time Digital, which is in partnership with Pick n Pay. Michael Jordan, still a little bit shaky and cagey as to all of the detail of what Bank Zero is going to look like. And Adrian Gore, Chief Executive of Discovery, with the announcement this week of the launch of Discovery Bank, which opens to the public from March 2019. That is it from Taking Stock. Thank you very much for watching. Till next time, bye-bye.